Welcome to the Three Questions Webcast series. I'm Wayne Baxter with One Capital Management. At One Capital Management, we develop and implement strategies for our clients which strive to grow, protect, and ultimately distribute their wealth. And we do that by offering investment wealth management services. Thank you for taking time to check us out. My clients are often referred to as cross-border clients. Why is that? Well, it's because they're either U.S. or Canadian residents who invest in U.S. and or Canadian dollar-denominated securities like stocks, bonds, and ETFs. Our process for advising our clients includes an in-depth discovery and diagnostic analysis of their wealth management goals and objectives. And as I've often stated, wealth management is multifaceted. There are several areas beyond investment and retirement planning that need to be discussed and considered. One Capital Management, we call that process advanced planning. Under the advanced planning umbrella, we include an in-depth risk management review, or if you prefer, a view of non-investment risks that a family likely will face as time goes by. And one risk you'll going to want to prepare for is the financial impact resulting from when you or a loved one requires long-term care. On a second of a two-part Three Questions webcast dedicated to discussing long-term care and long-term care insurance, we're going to speak to a life and health insurance general agent who specializes in the placement of life insurance, long-term care insurance, disability income insurance from more than 50 insurance carriers from across the United States marketplace. On the second of a special two-part Three Questions webcast dedicated to the topic of long-term care and long-term care insurance, we're going to ask the three questions you should ask before purchasing long-term care insurance. Joining me once again on the Three Questions webcast is Scott Thurman. Scott is the Principal and Life Insurance General Agent with Thousand Oaks, California-based T&T Premier Insurance Solutions. Scott, welcome to the webcast once again. Thank you.
Thank you. Thank you for having me on, Wayne. It's good to be here.
You know, in our last webcast, we talked about basically the when does somebody should be considering insurance. And one of the interesting things that you brought up is that the need for long-term care is not an age-based issue. It's more related to, when someone is unable to do, as you called them, activities of daily living, right? If you cannot do two or more activities of daily living, such as transferring in and out of bed, bathing, toileting, feeding, being examples, clothing yourself, or if you have some kind of a cognitive, disability like dementia or Alzheimer's, that's really what determines whether or not you qualify or you have what's called a long-term care event. So you did a great overview of that. And on this time, we're going to get more into the weeds and discuss more about long-term care insurance. And I will say, Scott, that, I moved here to the United States a little over 10 years ago, and you've been an incredibly valuable resource for me, helping me and helping my clients when it comes to, sourcing, underwriting, and then ultimately placing life insurance and health-related insurance. So I can't thank you enough for that. And to that end, Scott will be joining me on some additional Three Questions webcasts where we're going to be asking questions about term insurance, permanent life insurance, and we're also going to talk about long-term disability insurance, which is also more known here, I guess, in the U.S. as DI or disability insurance. So again, Scott, thanks a lot. Really appreciate you having you here. And if you happen to have missed that first webcast, the one that we did on long-term care, I'd encourage you to visit the Three Questions webcast YouTube channel and click on the link for the three questions you should ask about long-term care. It was a very educational, informative episode, and I encourage you to check it out. Scott, you know what? Why don't we just get right to our questions? We got a lot to unpack here. So let's ask the three questions you should ask before purchasing long-term care insurance. The first one is the obvious one. Right. What is long-term care insurance?
Right.
Let's start at the basics here.
Great. So again, thanks for having me on, and thanks for the kind words. So long-term care insurance basically is just like what it says. It's insurance in the event that you should have a long-term care event. And again, that means you can't do 2 out of the 6 activities of daily living. You're having trouble. It might be because of just old age, because we get feeble when we get old. It might be because I have Alzheimer's or another disease. It might be because I got into an accident, which could be at a younger age, and I just can't take care of myself. And it's called custodial care. I need help. Um, at that point, if I have long-term care insurance, it will pay a portion or even all of those services that I need that I would have to pay out of pocket if I were not insured. And typically, what you're doing when you purchase long term care insurance is you are leveraging your dollars. You're spending money now so that in the future, if you have a long term care event, it will be covered, or a portion of it will be covered, and it multiplies those dollars or leverages them. So you're spending less of your hard earned money to take care of it.
Yeah, I don't, not to give the entire webcast away, but in the previous one we talked about the financial impact. You used yourself as the example of basically eroding 50% of your net worth to care for your long-term care, and leaving your better half, Julie, with a much smaller retirement if you were to predecease her. So that's, again, the importance of using other people's money here to pay for this, as opposed to using up all of your own.
Right, right.
Okay,
The two things, I'm sorry to
no, go
interrupt
ahead.
you.
No,
The
go
two
ahead.
things I don't want to do is I don't want to spend all of the money that we have for retirement on long-term care for me, and I don't want my wife or kids to have to spend time just doing custodial care. I'd rather they spend their time with me in companionship. So I don't want them to have to try to take care of me, and I don't want to spend down all our assets.
You bring up a really good point there, because I think it's studies have shown, and it's just pretty much factual, that the role of a caregiver can be as traumatic as the actual person needing the care. That experience can be incredibly traumatic. So being able to bring some people in to support and help provide that custodial care is something that the family will really value, because, again, being a caregiver it is considered one of the most stressful roles a person can have.
Well, what the statistics show that a spouse taking care of their loved one over an extended period of time can cut 5 to 7 years off of their life,
Yeah,
off of the person who's taking
right.
care of the person with a long-term care event. Yes.
I had a colleague of mine back in Canada one time. She I don't know, was at a conference, or she used the example. She said she was speaking to a couple. They were basically in her office, and she said to the wife, she says, "Okay, I want you to get up and go stand behind your husband." And she's okay. So she did. She got behind. She's okay. I want you to now go around, and I want you to grab him under the arms and try to pick him up. And I think that pretty much ended the discussion about whether or not there was a need for this for this discussion on long-term care. There was that's all it basically taught.
It made it real. It made it very real.
Yeah,
Yes.
100%. So we're going to get into the weeds here. We're going to get a bit technical on the 3 questions webcast here for the second one, but I think it's a really important one because of the way insurance has evolved, long-term care has evolved over the years. And that is question number 2. What is the difference between traditional and the new hybrid long-term care insurance?
Yeah, that's a great question. A lot
Put
of
your
people.
general agent hat on now for sure, Scott.
Yes, well, that's a great question. A lot of people ask today, and to this day, people come to us and ask for traditional long-term care insurance, and it really is an antiquated um, product and method, if you will. Ages ago, when we came out with the whole long-term care concept, um, a lot of insurance carriers started selling it without having a clue how long people would live and how many claims they would actually have. So they had to go back to the state numerous times and say, hey, we're having way too many claims and people are living way too long. We've got to raise the cost of our insurance. So if I bought a policy when I was 50, in my 70s, when my income is fixed, I could have my long-term care premiums increase dramatically every 3 to 4 years when I could not have the money for it at that time. So with traditional long-term care, uh, It can increase over and over. The second thing is it's use it or lose it. So I may pay for long-term care coverage for 20 or 30 years, and then if I never need it, then the money goes away. It was a faulty system, a faulty product, in my opinion. Now, the new modern long-term care products are much better. They are a hybrid product. They do have a life insurance aspect to them. They're built on what I would call life insurance chassis without getting too deep. Basically, what that means is if I live too long, then the long-term care will kick in and take care of me when I need help. If I die too young, then the life insurance portion of it will pay and make my family whole on the expenses that I put towards long-term care. So it's gonna pay off either way. And the second part is it will never increase in cost. So it's brilliant compared to traditional. I think the majority of carriers, last I checked, I think there was one or two carriers in the state of California that even offer the old uh, uh, traditional type long-term care, the horse and buggy, if you will.
The horse. Well, I remember when I was in Canada, the most how you were describing the traditional long-term care was very similar to what we were being able to offer there, where you basically had the policy would reset. It was a scheduled reset every 5 years based on the category that was underwritten. So it was, age, gender, location, and then basically the premiums would stay same. They were guaranteed for 5 years, and then they could be reset to no more than 50%.
Yeah.
But I mean, you're basically describing the same situation where someone buys long-term care insurance and say they're 50s or 60s, and there's this reset, and obviously probably not much of a reset to be worrying about in the 50s and maybe even 60s. But by the time age 70 come along, these resets are becoming more of a reality,
Right.
and ultimately, like you said, when you're in your 70s, you're more likely to be on a fixed income, and these premium payments just
Right.
start going up and up, and to the point where where you're become the most vulnerable is when you're probably the least likely to be able to pay for the premiums. So
Right.
this new hybrid type of life and long-term care insurance basically speaks to that and ensures that the premium payments stay the same right through. So it's much easier from my perspective as someone who does financial planning and does capital forecasting, to put this into a forecast and be able to show your client this is your premium payments all the way through until a long-term care need. It doesn't change, it doesn't go up, it doesn't even go up by COLA, cost of living adjustment. It just stays the same.
Right. It's
So
true.
and so again, you can actually do forecasting to predict. And I've done this multiple times with clients where we will show them paying their long-term care up to an age, usually in their maybe 80s, and we'll just arbitrarily pick a year and say, okay, this is when the long-term care event occurs. And you can show
Right.
them paying the premium payments up until that point, and then once you make a claim, you don't pay premiums anymore, and you can show them the impact of having that long-term care insurance compared to what we talked about previously as well, which is self-insuring.
It's a great
So
tool.
yeah, it's essential, quite frankly, for what we do. Okay, I want to get to the third question. The third question regarding what you should ask before you purchase long-term care insurance is, what are the different types of policy currently available? And there isn't just one kind. I know we talked about new hybrid, but maybe we can get a little bit further into the weeds on the different types of hybrid policies that are out there.
Great question. And before I answer that, let me preface it by saying, since we just spoke about premiums, these products that I'm about to discuss, you can pay them in numerous ways. You can do a lump sum large premium payment and have it done with. You could do a 10 pay or a 20 pay, so that while you're still working, possibly you get all the payments out of the way, so you're not paying. They're not going to go up in cost annually, but at least you can get them out of the way also, in addition to them not increasing. So there's different ways that you can build, I guess, the payment for these products, which is wonderful to fit each person's budget. Uh, I'm going to cover a couple of different ideas with long-term products. I'm not going to get into the specific carriers. That's for another time, but I'll just give you an idea of some of the hottest selling, best products that are out there in today's marketplace. One in particular is for a husband and wife or a significant other. And it is what I would call a joint policy. It's the only policy I know of in the nation where both you and your spouse, you and your significant other can get on one policy. It covers both of you. It provides long-term care benefits for both of you. If you both pass away, then there is a life insurance portion, as we mentioned earlier, that would go to your beneficiaries. The other thing about this particular policy is most long-term care policies will cover you for a time period, 3 years, 4 years, 5 years. This particular policy has the ability to continue your benefits for an extended amount of time up to lifetime. So for those that are really concerned about the what ifs, I've had a mom who had Alzheimer's, and I'm super concerned about that because her grandmother or her mom had Alzheimer's also. And now I'm concerned I could get it. I want to be covered for 10, 15, 20 years. This particular policy is brilliant for that because it covers you for lifetime. So that's one type of policy. Another type of policy is one that you're concerned both with the life insurance and the long-term care. Maybe you're a father, age 45, you're the main breadwinner. And so you need some extra insurance in addition to maybe a term policy you have, and we'll discuss that in a different broadcast, but you want extra life insurance. So maybe I get a $500,000 or $1 million long-term care policy that also is on a life insurance chassis. So the life insurance is robust and the long-term care is robust. If I need to use that $500,000 policy for long-term care later in life, then I can use it at that time up to the full 500,000 over extended period of time. If something happens to me and I pass away too early, then my wife receives a death benefit of 500,000 tax-free, and that's one of the major benefits of life insurance, by the way. One other type is a product that looks at all three buckets of, am I going to need long-term care? Yes or no. If I don't need long-term care, am I going to die too young? Yes or no. If I don't die too young, what if I just am going through a difficult time financially and I need my money back? There's a policy out there where you can put in a chunk of money or you can 10 pay it, and you can put this money in and it's going to pay off no matter what. In addition to, if I get into financial struggles, I can pull my money back out. So there's literally no way to lose on that particular policy. You're going to
is that for on an individual policy? That's not for a joint policy.
That is not joint. That's an individual policy, and yeah, that's one of the limitations to that particular policy. But it is a solid product also.
I have a question about the joint one that's often asked, and because you and I have worked on a few cases where we've used this solution. Is the when you look on the illustration and it shows the benefit, I guess the recent one we did, the benefit was like $9,000 a month, and one of the questions I was asked by my clients was, is that for both of us, or is that the 9,000 that we have to in other words, is that the limit on a 9,000 on for that joint plan? Is it $9,000 for if both of them end up in a care facility? Do they both get 9,000, or is that the 9,000 simply for the one client, or for
on that particular product? It is $9,000 per person, and of course these can be designed in whatever way you'd like. If you want 10,000, if you want 8,000 in long-term care benefit, we can design it whatever way you want.
Yes, 100%. It's customizable. I think the confusion was whether or not that was all there was. They had to split between the two of them, or was that if both of them had to make a claim, was there going to be 9,000 a month for each of them?
Yep, per person, and if you add a continuation benefit on the back end of that, you can also add inflation for the cost of living increases. So you can add an inflation rider. There are different things that we can do on most of these products that really make them robust, and really they're designed specifically to help you out with your long-term care needs.
Before we wrap up this episode, I want to get your response when someone says to you that they take, I take such good care of myself, I'll never need long-term care services. Therefore, there's no need for long-term care insurance.
Yeah.
Because I'll tell you right now, I have had that discussion more than once.
Yes, that's another great question. We're all superhuman until we're not. And the bottom line is, you look at somebody that's an Olympic athlete in their 30s, 40s, 50s, 60s, they may be in phenomenal health and look great, and they may be in great health the rest of their life. But once you hit 80, 85, 90, I don't care who you are, you become feeble. And once we become feeble, sooner or later, we're going to need help. And many of us are living to 100 now. I have a grandmother that just passed away a couple years ago. She lived to 99 and a half. In the last 10 years of her life, she never left her home. She was healthy enough to stay in her home, but she got so feeble that she couldn't even get up in bed at night. So we had to have an aunt put her in bed at night with a diaper on. She'd go to bed. In the morning, a service would come in and help her with long-term care for about 4 hours. And they would get her out of bed. They would toilet her, clean her, put on a clean diaper. And then they would feed her and stay around for 4 hours to make sure her basic needs were taken care of. She still at 99 was healthy, although she lost her hearing and her eyesight. She was losing a lot of that, and it would take her a lot longer to get from one place to the next. But she still was able to live in her home. But she needed help. You're going to need help. If you live long enough, we're all going to need help.
Scott, what more could I say? It's something that we need to remind our clients of all the time, that one way or the other, there could be a potential risk. And that's, again, the benefit of taking care of these things now. So, because unfortunately, as we all know, once you have the care need, it's too late to ask for to try to try to enroll for insurance. Okay, just to wrap up here, I guess before we do, I guess the obvious question is, for someone who maybe wants to inquire about your services, what is the best way for them to reach you? How can they get a hold of you?
Great. They can email me at scott@tntpremierinsurance.com, or they can call me at 805-208-6587.
Perfect. Again, Scott, thanks again for joining us. Scott Thurman is the principal and a life insurance general agent with Thousand Oaks, California-based TNT Premier Insurance Solution. Thanks again to Scott Thurman.
Thank you, Wayne.
I look forward to bringing you the 3 Questions Webcast, and I hope you find them educational and informative. Please consider liking this video and to subscribing to our YouTube channel. And to receive notification of when our latest webcast has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and see you soon.